Let's get another earnings call in. Firstsource announced numbers, and the numbers are actually pretty good in terms of the profitability. Rajesh Subramaniam, the MD and the CEO of Firstsource, joins in to talk about that. Hi, Rajesh. Thanks very much for joining in. I'll start with the FCCB bit. How much is actually outstanding at this point in time in December, and what is the plan? Because you have accumulated around $150 million of cash as of year end. What's the plan with the FCCB bit?
Yeah, great question. The total accreted value of our outstanding FCCBs on the repayment date, which is the 1st of December 2012, is about $237 million. We've built up cash of about $150 million as of March 31st, and this cash will build up to higher levels as our free cash flows going into next year start adding to our current cash balance. We have several strategies in place. We're talking to the various constituents in our company, largely the lenders, and evaluating multiple strategies to see how we can augment our cash. The deficit is about $65 million, and we have 6 months to come with a credible, cohesive strategy to ensure that we repay our liability, which is due on the 4th of December.
Rajesh, just before we get to our numbers, just wanted more clarity with regards to the FCCBs. Are you actually then looking to raise additional funds to meet the shortfall and hence completely redeem the FCCBs, or the shortfall can then just be restructured?
I think it's too early for me to comment whether the company will restructure the bonds. I think at this point in time, all efforts are on to repay the FCCB liability, and that's where the strategies that the company is pursuing in conjunction with the board and our shareholders is to ensure that we build up adequate reserves over the next 6 months to repay the FCCB in full. The joker in the pack is the exchange rate. The exchange rupee has depreciated significantly, so that impacts the quantum of our repayment changes depending on where the exchange rate would end up at the time of the repayment. So we've seen the rupee depreciate by more than 20-25% between the last 2 quarters, and we are managing our liability just to ensure that we manage to repay our liability in line with what we believe is good practice.
Okay, let me come to the numbers. Q3 was an improvement in terms of margins, but in general for FY12, the EBIT margins are down by 5 percentage points or so. And in your press release, you have spoken about improving margins in the current year. Will margins be high single digits, double digits? Can you give a more precise guidance?
It will be in high single digits.
Okay. What's the revenue growth that you are expecting in FY13? Will you manage to beat the NASSCOM guidance for the industry, 11 to 14%?
Yes, it will be at the NASSCOM guidance, 11 to 14% there, but there are probabilities that we might improve our growth, which could be slightly higher than industry growth rates. We signed up about $160 million of deals, total contract values, which we announced in the last quarter, and they will start playing themselves out over the next 3 years. And more often than not, we've seen that some of these customers with big deal sizes have a tendency to grow faster than what the total contract values that we have announced. So we are confident that the growth is going to be robust, backed on our wins in the telecoms and media industry. We see significant traction in that industry, especially in Europe. We also see very good momentum in our healthcare business in the US, given the reforms are having a positive impact both on our payer and provider side of the business. So we are confident as long as ceteris paribus remains. We believe that our ability to grow higher than industry is definitely possible.
All right, we'll leave it at that, Rajesh. Thanks a lot for joining us with the details on your numbers. Market's still in somber mood. It's a 1.3% cut on the Nifty Junior as well, indicating trading sentiment is bad. Let's take a break.